If you decide that you want to invest in specific startups today, where would you put your money?
Put a lot of my money in real estate.
Okay.
As a business, we reduced our margin percentage because transaction values went up. It was only fair to reduce the percentage of profit so we don't pass on that much additional burden to our clients.
Is that a decision made by you, the entrepreneur, or you have a lot of sovereign wealth funds on your cap table?
We do close to $240 million kind of top line revenue every year. But then that we still don't have even 1% market share. But then we are the biggest by a margin. So that's the amount of fragmentation. I'm a third generation businessman, and my father, my grandfather, they never diluted their business by raising equity and, diluting themselves.
You're growing like 200-300% in the early years.
Yeah.
I never wanted to be an entrepreneur.
So I'm definitely an emerging market junkie. I like to go to the frontier.
Okay. Give us the meat, Abdallah.
You need to be able to make the sacrifices that are required for this journey.
Take pride in your job. This too shall pass.
Yes.
So this morning I was trying to prepare breakfast for my kids. I had, freshly imported strawberries, blueberries, honey, oats, etc. Everything was available. And it got me thinking, wow, we're really blessed to be here in the UAE with all the staples readily available. And that means that there's something really happening in the background that is keeping all these staples available on the shelves. Sure, some prices might have gone up. I mean, I've noticed it in the supermarket, even though I think a lot of measures are being taken to ensure that there is no profiteering that is happening. But at the end of the day, if you want to buy something, it's there, it's available. And that means that there are so many resilient networks in the background that are working together to make sure that we get the stuff that we need on the shelves and to make sure that there's no disruption to the end consumer. So these nodes are governments relaxing the rules to make sure that goods are being shipped across borders, land bridges, rerouting cargo via new ports, shipping, trucking, and business owners, making the right decisions to make sure the goods are being imported into the country. And normally in the middle of, such crisis, there's always opportunity. And entrepreneurs are the masters of spotting opportunities, especially when they have been ready and they are there at the right time and in the right place when the opportunity presents itself. And so when ports closed, the first person I thought about is Gaurav Biswas, who is the founder and CEO of Trukker, the Uber for trucks. Gaurav's been building for 9 years, roughly since 2016. He's raised close to $200 million, around 600 employees. So you've been there. And an opportunity comes, as devastating as the opportunity is, but nonetheless, trucking became a major pillar of to counter the disruption, basically that is happening. So Gaurav, the Strait, as of today, we're May 16. The Strait remains closed. I looked at the global prediction markets. One of them saying it will open end of June. One of them saying it will open end of December, which really means that no one knows when it's going to open. And you're a business owner. You're trying, you raised $300 million in debt recently to scale your business. So when you're sitting in the war room with your team, what scenario are you planning for?
Great, Loulou. Thanks for having me. Very, very nice to meet you and have this conversation. I think the current crisis, and I think the weaponization of the Strait of Hormuz or the Bab el-Mandeb that happened a few years ago, disrupting the Red Sea, I think those are severe challenges on the GCC. And something which is happening right now, whether it ends in June, whether it ends in December, I think the more important fact is that somebody else controls the traffic light where we have the maximum amount of traffic going through. And I think that's where the GCC needs to really now step up in building these resiliences to not just, prevent disruption, but to have constant supply chains that are disruption-proof. So I can't, it's anybody's guess whether it's ending in June or ending in December. I think we all wish that it ends faster so that things can go back to normal. Prices that might have gone up come back down. But we need to be prepared for a scenario that nobody else who is not part of our business, part of our geography, is able to control a traffic light, which disrupts our cargo coming in and out. And it's not just imports, it's also exports. You can see how the global, the farmers in the US or the manufacturers in India are impacted by the Strait of Hormuz because they can't get fertilizers from the region or they can't get gas from the region. So it's really important for the global economy to figure out that the GCC and the products that it produces are reaching global, markets without disruption of this kind.
So what is happening today on the ground? So you said it's a huge disruption. I know you probably talk a lot with different stakeholders, whether it's government, whether it's some of your clients that are some of the largest companies here, FMCGs, companies that have manufacturing products and so on. So what's happening today on the ground?
I think something quite interesting, when this thing happened on the 28th of Feb, I think for every company, the first point of reaction was to check on their own people and their well-being. From a trucking perspective, I think this is a very hardcore sector. There are no cutie pies in our business. Nobody was thinking of leaving the UAE and going back home. So what we really wanted to check that, hey, what's going on with our drivers? The truck drivers that we don't employ, these are our suppliers. We're an asset-light business.
How many truck drivers you work with?
So the network across 7 countries aggregates excess of 75,000 truck drivers and transportation companies. We service about 1,200 to 1,400 businesses that depend on us for their trucking requirements. So, but the GCC specifically, I could see missiles from, the Patriot missiles flying out to go and defuse a incoming missile in the air on that weekend. It was an experience, the first time, I think a lot of us who never imagined that UAE would have this kind of a experience for us. I think that was new, but the government did an excellent job in communicating very quickly what's going on, so people stop speculating. But from our industry perspective, we were at work every day during COVID. We, Trucker and its teams and overall logistics sector had those passes that you could go out during curfew hours, even when, at the peak of COVID. So our sector actually steps up, and trucking is that invisible infrastructure that you normally don't see, and you take it for granted. You go to the mall, you never see the delivery areas of the mall where all these trucks come in and supply the stuff that you buy, your strawberries that you bought, cooked this morning. So, but when something happens, suddenly trucking becomes very important. That's certainly now everybody wants to talk to a trucker and other logistics companies, ports, what is going on. But
your phone started ringing.
The phone started ringing. Clients were nervous. I think the other, important and quite an interesting fact about this time was I don't think people panicked. Like I was at a Spinneys on that Sunday morning, the day after it started. And I could see some people, queuing up, and the Spinneys was busier than normal. But it wasn't like COVID. People were not, shelves were not running out of paper rolls and things like that. So I think there was a certain amount of calm. And I think when you talk to the FMCG, like we supply trucks to the biggest FMCG producers across, the global ones who are here. And we spoke to them and they're like, yes, there has been some amount of additional ordering by the retailers so that they don't run out of stock, but it wasn't anything compared to COVID. So I think overall, the UAE, Saudi Arabia, the GCC are that much more prepared in terms of their food security and the staples security. I think the disruption that started happening more acute was up from the first and second week of March, where the industrial consumers, I don't know, many people don't realize that UAE is one of the largest producers of aluminium. Bahrain has also a very large aluminium plant, where these aluminium go to global car manufacturers. Tesla cars are manufactured with aluminium coming out of the UAE. So a lot of these industries started feeling the pressure because they are importing into hundreds of thousands of tons of raw material, converting into hundreds of thousands of tons of finished product, which goes out globally. And those you can't move by airlines. Like the strawberries and blueberries, they could be flown in. So you don't rely on it becomes a bit more expensive when you have to fly in stuff, but at least those basic food can fly in. But when you talk about rice, grains, those come into ship full of cargo. You can't bring them by planes. So, and normally those are stored for a few months of food security. But when you stop getting supply, all that, the storage silos start going down, which is the case right now in the last few weeks, where UAE is really replenishing a lot of their food security related soft commodities that went down in stock. They are now restocking it back to a few months of inventory, so that we don't have any crisis and have to fly in stuff. But industrial clients, have started feeling a lot of pressure from mid-March to now, where if you look at by numbers, the Jebel Ali port and the Abu Dhabi port together are a 25 million TEU capacity port.
TEU is a 20-foot container?
Yeah. So that's the capacity of those ports to handle as many boxes in a year, right? Now, both these ports are now switched off for containers coming in and out, right? And that's been replaced by the port of Khor Fakkan, the port of Fujairah, Sohar, which together don't make up 10 million TEU. So that you can't imagine Emirates Terminal 3 with the amount of gates it has. And if you suddenly have to move all those people to Sharjah or Muscat airport, it's not going to happen. And if you look at the trucking relevant to the same anecdote, is even if Sharjah and Muscat airport build as many gates for people to come in and out, the taxi pickup and drop off is not there compared to the Terminal 3.
So the infrastructure is not there.
So the infrastructure is not there. The gates are not there for a port to have as many. So overall, even today, the amount of cargo that is coming in and out is nowhere compared to what it was before the disruption. And I think that's the permanent shift that the GCC has to do, where we don't depend on the Strait of Hormuz or the Bab al-Mandeb on the south of Red Sea, and build significantly more infrastructure on the eastern and the western edge, because that helps us to completely avoid these things. And once we have relevant infrastructure to completely avoid those routes, we don't care about somebody, putting a red sign without consulting with us or without giving us any warning and weaponizing an international trade route. And the region has no shortage of capital. We build the best towers and the best hotels. I think we must be able to build a few extra good quality ports.
It is happening. I think I saw there was an announcement yesterday. The Crown Prince of Abu Dhabi directed ADNOC to accelerate the building of a pipeline, basically that goes to Fujairah, correct? What I saw is also Neom port is now functional. I saw that they're trying to create a new route from Europe to Egypt to Neom in Saudi Arabia, and then to ship goods and services to the UAE and the rest, Saudi, the rest of the GCC. It's interesting you say that, actually, because in my research, I also saw that, I never really realized it before, but like the Strait of Hormuz is the only maritime route to like Kuwait, Bahrain, Qatar, and obviously
Iraq.
The majority of the UAE. So this is really huge, but it's also amazing that obviously there were already projects there to mitigate. Maybe. I don't know if it was in the calculation that this might happen one day, like the Habshan pipeline, correct?
Yes.
And then, so obviously I saw there's many land bridges now happening, 900 kilometers and like hundreds and hundreds of kilometers crossing Saudi Arabia, for example, and from Oman to Jebel Ali, right?
Yes.
Again, please correct me if I'm saying something wrong, but this is from what I read. So there are things being done. When will these things be fully operational and basically be able to take on the load, as you said, of a Terminal 3 equivalent, of an Emirates Terminal 3 equivalent is the question, right?
Yes, I think we would probably never get to producing 100% redundancy. And I think that's something which is, too much, redundancy. But I think the ports right now on the eastern edge of UAE and the ports of Oman, they are nowhere close to what Jebel Ali and Abu Dhabi port or the Dammam port handles. And you rightly point out that some of these GCC countries like Qatar, Bahrain, Kuwait are completely locked if the Strait of Hormuz is off, right? So I think the land bridges are an immediate temporary shift. They cannot take the volumes that these ports were taking. So it's important that the Strait of Hormuz opens up ASAP. But what the land bridges have been able to do is to make sure that the critical commodities, like the first few weeks of March, were focused on food security and prioritized on UAE imports. So now UAE is also, moving a lot of stuff that is coming through a Khor Fakkan or a Fujairah or in Sohar in Oman, that is coming to Jebel Ali and then going on a different vessel to Qatar and Kuwait. So we are helping the countries in the Upper Gulf, and so is Jeddah, by the way. So the Jeddah port, which is also quite a important port, and the only problem with Jeddah is it was always operating at capacity. So now it's like burdened with so much more additional traffic. But Jeddah is also another, edge, western edge of the GCC that's helping the whole of the GCC. But more importantly, the land bridge needs to be something which is designed in our supply chain, and it is not something that only switches on and off in crisis, because that is what makes prices go up. When you're not prepared with adequate supply, when the demand is going to spike, that's when your prices go up, because suddenly there's much more demand than supply. But I think the infrastructure that is getting built now, it is going to take a few years. I think you pointed out the ADNOC pipeline. So that's going to double the capacity. Right now, UAE can pump, I think, 1.2 million barrels per day through the existing pipeline in Fujairah.
1.5, yeah.
1.5.
Yeah.
And having the second pipeline will take that to 3 million.
Yeah.
And the UAE's total capacity is about 5. So that's a big, improvement, that 60% could still go. And that's the same thing that we need to do for containerized cargo.
Yeah.
That at least 60, 70% of our cargo can continue moving through another route if the primary route is disrupted.
With all that backdrop, your company became extremely critical, right? I mean, so you're the Uber for truck. Your job is to aggregate that supply and organize the supply, because I would assume the supply is extremely fragmented of trucks.
Correct.
Where do you get extra drivers when demand spikes, right? I mean, how much did demand spike?
So overall demand, if more than the quantum of demand going up, the type of demand changed. So if I give you an example, so typically if you are an importer sitting in Jebel Ali or DIP or some of these areas, and your container comes to the Jebel Ali port, that container could be brought to you in a couple of hours. So a typical truck can probably bring 4 containers in and out of the port in a day. Now, suddenly that container is now not coming to Jebel Ali anymore. It is coming at Khorfakan or Fujairah. And that one truck can only bring 1 container in a day. So you see, so you've reduced capacity by 1/4.
Yeah.
So it's not a function of how many trucks do you have. It's the amount of how much work does the same number of trucks that were there in the country until the end of Feb now have to do much more long haul versus multiple short haul.
Yeah.
So that wipes out supply. So that's happened. But overall,
obviously, the cost of the cost of transporting it goes much higher,
the
right?
cost goes up, and but what happened also is something that certain sectors priced in contingency over contingency and risk over risk, and that ended up making some crazy prices. Like we've seen clients that where the trucking was costing 100 dirhams, so were getting invoiced by their freight forwarder at $100. And because it was such an unknown, everybody was like, hey, listen, at least get my cargo, I'll pay you $100. And some of that ended up being very significant profiteering by certain sectors. And if you look at what we did at Trucker in mid-April, we actually published a free-to-download document on our website. And we said, this is for all UAE and Saudi Arabia clients. Anybody importing through the port of Khorfakan, Fujairah, Sohar, or Jeddah could actually go into the document, see exactly what is the scope of work and what is the price. And that would, even if that is not a client of Trucker, he could use that to negotiate with his existing supplier that why are you charging me 3 times more or sometimes 5 times more.
How are you able to lock the price, Gaurav, if you're a marketplace?
Yeah.
So how are you able to get the prices down? How does it make sense for a supplier who can, in theory, profiteer a lot from the situation? As you said, there's a lot of panic, and people want to get their stuff in and out and so on.
So if you look at trucking alone, so the whole supply chain has multiple elements: the shipping line, the port authority, the customs, and then the trucking. So the customs does not change as a price, right? That's a service, so it doesn't change as a price. The port authority is also typically, as much containers, there's a terminal handling charge and things like that. Those don't change. The shipping prices change because now the shipping lines who can't go to Jebel Ali, or if they're stuck there, they're all pricing a risk premium, and insurance, by the way, went up significantly for these shipping lines. So that is a variable cost. So we gave the clients the price that once your container is on an alternate port compared to the original port that they were supposed to come in, that's the price that we fixed. So we can't control the shipping line, how much they are charging to bring a box from Europe to here or China to here. But once it's here, instead of the original port, then we give that price because trucking, we are the biggest brokers. So we see that the transportation price has gone up. Fuel, by the way, UAE fuel prices went up by 70%, diesel prices. So we can understand what the prices are going up, but because we are the biggest broker, we can price cap a lot of that. So when the individual transporter, the small transportation fleet company, when they're working with us, one, they get instant payment. So they're spoiled in that way compared to working with any other broker. And that's some of the value that we add. And then when we cap that price, they know that, okay, if I need to get a higher price, I need to go to another smaller broker and maybe I have a payment issue and things like that.
Yeah.
So we are able to control a lot of those prices. In fact, we, as a business, we reduced our margin percentage because transaction values went up. It was only fair to reduce the percentage of profit so, we don't pass on that much additional burden to our clients. So that
Wow. Is that a decision made by you, the entrepreneur, or is it you have a lot of sovereign wealth funds on your cap table? Was that
No,
that's
they are financial investors. They don't interfere, with the day-to-day strategy of the business. Yes, I did get some calls saying, "Can you help that company on priority and things?" But no, I think I've been in the region for 18 years. I came here when I was 25, and I don't want to profiteer. I've seen multiple crises happen here, from the Lehman crisis to, COVID and all of that. I'm very confident that we always bounce back faster and higher.
Yeah.
So I don't want to be contributing in any way to compromise the government's ability to bounce back or address this kind of a situation. So that's where we were like, hey, listen, let's not profiteer from war. It says anyways, land freight is benefited because of higher demand. It's our time to up our game, but let's up our game in the most professional, transparent manner. And we were able to advise multiple of our clients, where the reason why we just did not put the price, we also put a very detailed scope document.
Yeah.
Because some people who are profiteering were actually profiteering based on information arbitrage.
Yeah.
Because your client just doesn't know what's going on, you can create an artificial kind of a panic, which makes your client pay more.
Yeah.
So we did all of those things that
I saw that on your website, by the way, the PDF that you created. Yeah, it's really amazing. I mean,
Yeah.
you really detail what is required for you to ship to a specific, whether it's UAE or Saudi Arabia, what is required, the documents, right?
Correct.
Yeah.
Correct. And that's important, because it's a complicated business. It's not straightforward. It's not, food delivery where you pick up from a restaurant and you deliver it to somebody's house. This has to go through industrial cargo. Is much more complicated. So the scope definition was very important for the clients to understand.
Yeah. So that's interesting. So you worked very hard on capping the prices so that the staples and the products that end up with the end consumer don't go up in price. Was there? Who's footing the bill for these things? I mean, you did say, for example, like fuel prices went up 70%, right? But if I'm still getting the same thing, at the same price or maybe at a very small increase, what's happening in the background that is basically absorbing some of those costs? Is it the government? Is it subsidies?
No, I think the price is going up. I think you must be seeing some prices going up at the grocery.
Yeah.
But and so is that exactly what is happening to a lot of industrial products. Petrochemicals are more expensive because oil prices are up, so petrochemicals are up. And the same thing is happening in other industries. But the end customer, like construction material, is more expensive now compared to before the crisis. Now, a lot of that is because of the transportation cost that's gone up. So UAE's typically transportation cost has gone up by 120%.
Wow.
Pre-crisis and post-crisis. Saudi Arabia, I think the prices are up by about 70% because Saudi Arabia did not change their diesel price. UAE, the diesel price has been up, increased by 70% since the end of February. So yes, there is an increase in everything. You go and try and buy, ceramic tiles for your house, or you want to buy steel for your construction. Prices are up. But I think right now the priority is to keep things moving.
Yeah.
Like I was expecting by the end of March that there would be an impact on construction projects, and construction projects would slow down because of whatever macro condition, but they haven't slowed down.
Yeah.
We service one of the biggest contractors, and they were like, no, man, the tenders are getting awarded. Clients want their buildings finished, so there's no slowdown in manufacturing of concrete that goes into these buildings or the consumption of steel. We have some very big steel producers in the region. They are very concerned about not getting enough iron ore, which is imported from the world and then converted into steel bars. So they're like, hey, if we run out of iron ore, we are going to not be able to support, and there'll be a forced slowdown of construction. Like I mentioned, aluminum. Alumina comes imported from other parts of the world and then gets converted into, proper aluminium that goes into cars or other things. So those things will start impacting if they are already not impacting. Some of these industries are not manufacturing as much as they were until the end of Feb. And the longer this thing goes, it will start having those impacts.
And you wrote a blog post actually on your website talking about, building more resiliency, especially inter GCC.
Yeah.
And you said basically that a lot of the rules and regulations have been relaxed, let's say, so that the flow of goods isn't really slowed down materially. But there are some challenges, I think, that you pointed out, like temporary visas, for example, for the drivers. Also, there's different, I think, truck specifications, right,
Yes.
between different countries and so on. So, in an ideal scenario, what should happen on the ground so that we're not in this, so that there's no, let's say, single point of failure, even though things are still, moving,
Yes.
right? So nothing has stopped. Okay, the prices went up, but like you still find what you need.
Yes.
So what's the ideal scenario?
If you look at trucking as a sector is always protected by their economies. So, because it is a core sector and, it employs, it's one of the three largest sectors anywhere in the world is construction, agriculture, trucking. Trucking is just that people don't see it. You see construction projects going up, or if you're in the, in the rural areas, you see a lot of farms. So you don't notice how much is trucking in everyday economy.
Yeah.
But it's also a very highly protected sector. Like if you look at Saudi Arabia, if you're a UAE number plate truck that goes to Saudi Arabia, you cannot do a job inside Saudi Arabia because those are protected for Saudi transporters. And similarly in the UAE, if a Saudi truck comes to Dubai, it cannot pick up cargo from Dubai and drop in Sharjah. It has to pick up cargo in UAE and only go back to Saudi.
Okay.
So that's to protect the UAE transporters. Now, this kind of protectionism is important, in normal times because you don't want your local transporter to feel competition from everywhere. But I think this kind of crisis, the GCC needs to open up itself. It needs to operate more like Europe. Europe is 26, 27 countries which are borderless. You can import cargo at a Spanish port and then move it to Czech Republic, borderless. So we have 6 countries that speak the same language, pretty much have the same, culture and history, but they have a lot of these borders amongst themselves. So if you are bringing cargo in a port in Oman and you need to ship it to a location in Riyadh, there is the land bridge and the green corridor. Those things have come up now, and thanks to the excellent, response from the authorities. But some of these things just should become permanent. That we don't really create more bottlenecks and paperwork and bureaucracy for cargo that is coming maybe in an Omani port, but has to go to a Saudi destination. And some of that, I'm hoping that it is permanent. And then I think some of even the infrastructure projects like railways, like Saudi is really pumping in a lot of effort in creating its own railways. UAE is number one ahead of everybody else in terms of Etihad Railway. But if you see the UAE and Saudi Railway, they're not connected. So UAE rail goes until the edge of the UAE on the Saudi border. Saudi rail is until Dammam and Riyadh. But I think that connection needs to happen now. Hafid rail in Oman is coming up. So I think some of these investments will accelerate now. And we will have a GCC-wide railway. We should ideally have a common customs. So you can use any of the ports of the GCC and are able to import and export cargo to any destination inside the GCC. And this will only make things more efficient. This will make us to react to this kind of, disruption much faster without panicking and without increasing prices. And that's what I meant in my blog.
I think after every major crisis, usually there are certain levers that the governments here around the region would pull to kind of accelerate things in one direction or the other. So if we do go, closer to the scenario where you just painted, where there's a lot of like connectivity around, for the entrepreneurs that are listening to this, what kind of opportunities would this unlock? And the reason why I say that is, if you look at Trucker, for example, probably you're not like one of the sexiest AI startups out there.
Yeah.
You probably didn't raise money very easily. You have actually now you have a lot of the big sovereign wealth funds on your cap table, but I'm sure it wasn't an easy journey for you, right? But do you think this will unlock opportunities for companies within the sector, or what sectors you think might be positively impacted?
I think trucking or logistics is a very core sector. It's like you can't avoid without this sector, and the sector also has a benefit of being extremely large. Like we do close to $240 million kind of top line revenue every year, but then that we still don't have even 1% market share. But then we are the biggest by a margin. So that's the amount of fragmentation. The next person,
The biggest, and how do you define the biggest?
biggest land freight operator. So we move close to 1,400 trucks on a given day, 1,400 loads that we load 1,400 big trucks every day across the network. And that's by far much more than any of the international incumbents or local, large fleet owners, significantly larger than of the second, third, and fourth put together.
Okay.
So that way, I think this sector is very large. It can't be replaced without some significant robotics that might come in the future, where you have autonomous vehicles and things like that. But I think from a fundraising perspective, I think AI is something which is the last 2 years. And AI, for example, we stopped using even AI in any of our slides because we were doing predictive algorithms for our pricing, for our demand supply mapping, and all of those things for many years. So there was a lot of this data-based ability to orchestrate your business, which was AI. It's now AI is much more monetizable by average Joe. And they can use it to, maybe, school assignments and a lot of, you can think of everything, right? Big to small applications. That's changed in the last 2 years. But from our engineering and product perspective, we've been using predictive algorithms for a very long time. In fact, we've been using AI since 2024, where the whole of 2024 was based on cleaning up our data buckets. Because the effectiveness of AI, like you could now completely not use the Trucker app to get a job if you're a truck driver, and you can simply speak to our AI agent on WhatsApp, get yourself registered, find a job, negotiate your price, and get paid without having to download our app. So I think that's what we are seeing in our shift, that, okay, AI is becoming more of a infinitely available communicator, because typically we don't want that, because you would have to then get your employees always on WhatsApp to be responsive and all of that, and that increases cost. But for a driver who sometimes does not want to download an app or is not really very proficient with such things. So for us, the data, part of the business is very proprietary, because we do so much volumes for so many clients. We know their payment terms, their credit score, their requirements of trucks, when, what kind of truck. And now to have an AI layer on top of that is constantly self-learning, speaks every language that you can think of. And now it starts, by the way, since April, our AI bot also can take voice notes. So we had that limitation. And drivers like to leave a voice note.
Of course.
They don't want to type.
Yeah.
And then the voice note can be in Turkish, Arabic, Hindi, Urdu. So now our AI agent understands voice notes and replies back to the voice note.
Yeah.
So those things are significantly automated in our business. I think for startups, I feel it's not so important around what is your sector. I think it's more important to get 3 things right, that you must be solving a real world challenge. It's not a challenge that you feel is very important. It should be a real world challenge, and it should be a challenge for a lot of people. And somebody must be able to pay you for solving that challenge.
Yeah.
A lot of times founders get emotionally attached that, oh yeah, everybody's going to buy this. But listen, if it's not selling the first time, something is wrong, pivot, change. So I think if they get those 3 right, I think AI or non-AI is not that important.
No, but let me ask you the question differently. If you decide that you want to invest in specific startups today, given the backdrop of what's been happening and obviously your experience in this, the sector, where would you put your money as an investor?
As an investor, well, listen, I'm quite traditional in nature. I put a lot of my money in real estate.
Okay.
Real estate doesn't and I believe in the rich dad, poor dad philosophy of, cash flow over, price appreciation. So, and I think...
Say more about that. The rich dad, poor dad. It's obviously a very well-known book, but
yes,
but say what do you mean? How is that influencing you, or what you learned from that book?
One, that I keep having real estate as an asset class, which is more invested for cash flow, not invested as speculative, that I buy at 100 and I'll sell it for 200.
So
I buy at 100 and I count how much is my, the ting, 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 the monthly rent that keeps coming.
Yeah.
So I build portfolios on that. And I think that's something which is another very real industry, whether AI or non-AI, everybody's going to still need a roof to live, and human population is only going to keep going up.
Yeah.
So that's my fundamental, safeguarding my investments. That's what I've learned from my father, that real estate is a real asset class. Don't sell, always buy. So that's what, is what I do beyond Trucker, before Trucker.
You raised, I think, is it correct, close to $200 million in equity?
In close to $200 million in equity and debt. And the
debt.
recent thing that you heard about is a $300 million facility.
Yeah.
It just changes our entire capital cost, because we had venture debt, which was at a high cost. And we refinanced a lot of that venture debt with the conventional bank finance. And that's a big milestone, because banks don't want to give money to technology startups.
Yeah.
And to be bankable enough to get a regional bank to do that. And it's an extremely complicated transaction, which took 10 months to close.
Wow.
Yeah.
With the Abu Dhabi Commercial Bank.
With Abu Dhabi Commercial Bank. They're the sole underwriters.
So you paid off your venture debt?
We paid off our venture debt.
Okay.
We halved our cost of capital almost.
Wow. There's a lot of venture debt happening now. I know it's a bit of like we're digressing a little bit from the main topic, but I think this is very interesting.
Sure.
You see more and more venture debt happening now. VCs seem to be excited about it. It's very risky, I think, because it's not suitable for all types of startups, right?
Yeah.
Some startups don't have the recurring revenues that you might have, for example, at that scale, or some would say it might stifle innovation because you're going to be worried about paying off your debt versus maybe capitalizing on an opportunity that comes and you want to like double down and spend a lot of money on it.
Right.
What's your experience with venture debt?
So, to be honest, I think you're right that venture debt, the availability of venture debt has increased, because I think what has happened is the risk appetite into technology businesses has reduced. So earlier, the ease at which somebody would raise equity is now significantly more hard, because your LP, like you can put money in American bonds and make 5 to 8% coupon, and which until 2022 was like 1 to 3%. So the cost of money and the opportunity cost has increased. So people, when you have to now invest in equity, you need to make 20% IRR. And to get the conviction that somebody is going to generate 20% IRR is not that easy. Yeah. So I think it's more driven by that, where companies that are raising money right now are finding it harder to raise equity. VCs are finding it harder to buy into the conviction, or the risk appetite is much lower. And they find that, hey, debt might be at least a way to deploy the capital. But it's a double-edged sword. And I've always found, I'm a third-generation businessman, and my father, my grandfather, they never diluted their business by raising equity and, diluting themselves. Debt was really the way to grow. But then debt was the way to grow when you have cash flows that can support. Business. Yes. So that's something that startups must be very careful of, that you can raise debt if you can't find equity. But if you raise debt without having the ability to service that debt, then it's like a poison pill. You can suddenly die because your lender will, close on you. Yeah. So that's important, so you can't, and startups need equity because they're front-ending the technology investment, the product building, and all of those things, which in the previous world, in our past generations, did not want to build things in 2 years versus 20 years, right? So if we want to build something in 2 years versus 20 years, we need that equity to dilute yourself and pump up that growth and front your investment. But it needs to be very careful in terms of handling debt. Because some VCs, under the pressure of constantly deploying funds, I think they want debt to go in, but then they'll end up having a bad, non-performing, asset book if the startups are not able to service that debt.
What you said is so important because, like, firstly, I think obviously the startup ecosystem is maturing a lot here, and I think founders are much more aware of what they're getting into. But like, you've seen a lot of founders that have raised, 40 safes, safe notes, and just getting, more diluted without realizing how much dilution they're taking in. I don't know if founders really understood the value of dilution. Like if I raise $5 million or something like that, I'm essentially giving a chunk of my business and the future returns of my business and so on. And granted, look, in some cases, you might need that, but I think what you said is very important, that you need to before you go to raise money, you really need to think about, do I really need this money? And do I really need that much money as well? Like, how much are you raising? And who am I bringing on board as a partner in this business? And what's that gonna cost me? Not just from an equity standpoint, but from a peace of mind standpoint. I think what you said about venture debt is extremely important. I don't think we have started to see yet the results of the venture debt boom here. Obviously, information is very hard to get in this part of the world, so I don't know what we'll see. What is the main difference, Gaurav, between the facility you have now and venture debt? Like, what are the key differences?
So venture debt is much more flexible, easier to raise. The terms are, quickly, venture debt would take maybe 2 to 3 months to sign because, they don't come with as much scrutiny, due diligence and things like that. But the cost is also that much higher. So
what is the cost usually of venture debt?
I would think in the region right now, venture debt is getting placed anywhere between 13 to 20%, which is very high. But then that also reflects the higher risk that venture debt is taking versus bank finance. You can buy a car for 4% or 4 point something percent, right? But especially with startups, and if you look at our transaction, Trucker is asset light. The only assets we have is our people and maybe the laptop and the desk in the office, right? But we have a lot of receivables. When I contract to the biggest steel company, petrochemical company, and I give them my invoice, it becomes a contractual receivable. So it's a real asset.
Yeah.
But to get working capital financed with a conventional bank takes a lot of due diligence. So the transaction with ADCB is a non-recourse securitized trade receivable. So
what does that mean?
That means that the underlying security is that invoice.
Okay.
So if you are a steel company that has to pay me $100, I can invoice you, take that invoice, go to the bank and take $75 from the bank and keep rotating that money. So tomorrow if the 100 becomes 200, I can take 150.
Yeah.
So that helps me to keep my suppliers paid instantly as a value add of working with the platform. And as a business model, we try and tell the transporters and the suppliers that, listen, don't worry about business development. The network is doing that. The platform is doing that. And don't worry about working capital because this steel company cannot pay anybody instantly. They have a procurement department, an operations department, an accounts payable department, and an invoice has to flow through that. And a small transporter can't wait 30, 60 days after invoicing. Sometimes they can't even invoice to the standards of these companies.
Yeah.
So we solve a lot of those things, not only connecting supply and demand in most efficiently, but also take away some of these very basic things from this transportation company that otherwise would have to have employees and access to capital. So this securitized means that now anything that happens to that invoice, that risk stays with the bank. And that's where the bank also spends that much more time to know that Trucker is not taking risk on somebody who's going to default.
Yeah.
So it's quite a complex thing. And structurally, this is one of the first times I think that this kind of a transaction has been done because it's multi-jurisdictional. So ADCB is financing our receivables in UAE, Saudi Arabia, and Turkey. In UAE and Saudi, it is a Murabaha, Sharia compliant structure. In Turkey, it's a conventional senior facility. But all of that falls under one master agreement, which is run through an Irish SPV.
Okay.
Yeah. So we had some of the top lawyers of the world, White and Case, Paul Hastings. These guys advised on the transaction. So the reason it took that long is because it was that complicated. But securitized means I can now not have to give any company guarantee. In venture debt, a lot of this venture debt requires the startup to give a company guarantee, shareholder guarantee that if you don't pay or I will take your shares.
Yeah.
And there are a lot of these punitive kind of things. In this kind of a transaction, the only risk is the underlying invoice.
Yeah.
So that's very unique about.
Amazing. Congratulations.
Thank you.
That's really amazing. You've been building since 2016.
Yeah.
What's your plan, like personally? I mean, do you? By the way, I think this is very important to note for all founders and all VCs and everybody in this ecosystem that you're 9 years in and you're still building. It's not an overnight success, and it takes really a long time to get to a certain scale. But what does that mean for you? I mean,
listen, I think one, 9 years is not a very long time to build a business. I think that's again the bit of a Silicon Valley technology startup kind of thing. Where when I started Trucker, I was early 30s, and I, I I never expected that, hey, I'm going to make something and exit in 5 years. Those things are not every day. Musk is still building his Tesla and is still building his, but yes, he did exit eBay in a way, and there's only one Musk in the world.
Yeah.
So those things are not normal. So startup founders who start a business, they should not start with thinking of the exit. Like I said, if they solve a problem and somebody's ready to pay you to solve that problem, focus on that and try to find a big problem so you can keep building for a long time. So I don't have any such things that it's been 9 years. It might get to 19 years, but and then at the same time, I'm every day ready that this can go down to zero. I think that's what is more unique. I'm ready to fail, and nowhere I think Trucker is successful yet. I think Trucker is continuing to build. And that entrepreneurial aspect is more important than the exit, because if you keep solving, and like our unit economics are very important, so we are constantly improving our profitability, and I think that would result into you becoming valuable for a strategic investor who might think that, okay, let me buy these guys out because 1 + 1 might be 3, putting their one and our one, and it's great win-win for everyone. Or you might become big enough that you might be suitable to become a public stock that average people can buy into your shares. But we don't run with that as a regular strategy, that how do we exit the business. We are obviously running with, hey, can I get to 350 million top line and have 20% more clients and additional wallet share from the existing clients and keep growing. And I think,
well, maybe it's because how the system is designed that your funders require you to think of an exit, right? Because they want to make an exit themselves.
Absolutely.
I said that on a panel once in Saudi Arabia. There were other VCs sitting on the panel, and I said, like one of the VCs was talking about how they talk about the exit from day one, like from the moment they're making the investment. And I said exactly the same thing. I mean, what if the founder doesn't want to exit? What if the founder wants to keep building? I think luckily now we're seeing like more creativity around that. You have secondaries, you're able to sell your shares if you want, and so on. I think that market is starting to develop a little bit more. But
yes.
But yeah, it's kind of designed that way. You have to think of an exit from the beginning if you're building a company.
Correct.
You will get asked this question.
Correct.
And you need to have an answer. I have a few rapid fire questions. Honestly, Gaurav, I really enjoyed this. This is, you made trucking exciting. Let's see. What is the most expensive load Trucker has moved this year?
Oh, it would have to be something from Turkey to Central Asia.
Okay.
I think $22,000.
$22,000?
For one truckload.
Okay.
Have gone from a cargo that came from Europe.
What were they shipping?
Oh, no, it's the cost of the trucking. You mean the expense of the product?
Yeah. I mean, yeah.
Oh, cost of the product. We move copper. We move 20-25 tons of copper on a truck that can cost more than 1 million dirhams.
Oh, wow.
On one truck.
Okay, copper.
Copper.
Cool. The longest single overland route you're running right now?
Europe to Turkey, Turkey to Central Asia, all the way to Kazakhstan, China border.
So how long does that take? Days?
That would typically, in winters it can take about 20-25 days. In the summer it can take 10 to 15 days.
Okay.
Yeah.
Oh, wow. If I'm a young graduate venturing into business today, what trait is going to make me succeed?
Flexibility and hard work. I think I'm early 40s and I feel that the guys don't work hard enough, versus as much as I used to work.
Okay. And what do you mean by flexibility?
Flexibility to be, adapting to your environment. I think the environment at work is going to constantly change because of AI, especially for somebody who's starting their career. What you feel relevant that you studied in school might not be relevant by the day you land up on at your job. So your ability to quickly, because knowledge is democratic. Now, if you're not an electronics engineer and you need to learn mechanical engineering, you can spend a week slogging yourself with AI and get enough understanding of mechanical engineering. So as long as you're flexible and, to change to the requirements of the work environment and hard work is irreplaceable by anything. So people should be able to succeed, but they must be prepared for the job in a job environment changing in 6 months, in 1 year, in 2 years, and constantly.
I would also add the way you receive the way you interpret flexibility, you need to do it with an open mind. I find that a lot of people whine and complain, whenever there's a change that happens to the scope of work or to something like that. It's really mind-boggling to me how sometimes unflexible people can be. It's like, just do it, man. Just do it.
Get it done. I think anybody who would be execution focused and hungry to succeed, flexibility means that, hey, listen, I will go to another country, another city. I can do early morning, late night, and not have any such constraints, because I think getting a job is itself going to be more challenging. And then if you're not flexible and you start filtering the amount of which kind of jobs you want, I think you're going to just make it more harder for yourself.
Yeah. Last one. If I'm a business owner in crisis today, what is the attitude I need to have?
Problem solving. Crisis is pretty much constant. I think so. If it's not war, it's going to be economic collapse. If it's not economic collapse, it's going to be AI and its impact. If it's not AI and its impact, it's going to be something else.
I think. The client pulling out, contract being cancelled. So problem solving means what to you?
Resilience. I think you can't give up. I think if you are a business owner, you must always be the person who, ideally somebody who is able to see a problem before it occurs. But if you can't do that, then your resilience is extremely important. I think I love this book from Ben Horowitz, Hard Things About Hard Things. And it has a wartime CEO and a peacetime CEO. I think when it's peacetime, everything is moving great. Push your other people in the front and you can lead from the back with soft touch. But when it's crisis, you need to come right in the front, because sometimes people know what is the right thing to do. They just need somebody in the front to be prepared to take the fall if that decision is not right. And I think that's more important than when there's a crisis, you as the entrepreneur or the business owner is taking ownership of every decision where your team is reluctant. Even if they know the right answer, they're reluctant to take the decision. You must be able to take that in the front.
I love that. That's great advice to end with. Gaurav, that was an extremely useful conversation. I think a lot of our listeners, I'm sure they've learned something out of it. I want to thank everybody for tuning in. I have a few reminders just to ask of you. So I've been on a break for quite some time. This is, I think, the 5th episode since I've been back to recording. If you are listening to this on Apple or Spotify or YouTube and you're not subscribed, make sure you subscribe to the channel. Also, if you're listening on Apple or Spotify, make sure to give me a 5-star rating and write a review. It takes 30 seconds and it's really, really helpful for the show. You can learn more about my work by visiting withloulou.com. We'll put Gaurav's LinkedIn and the contacts for Trukker in case you want to talk to Trukker about doing business. If you're watching on YouTube, you want to leave any comments, any feedback about the conversation, I will personally read them and reply. I'll see you in next week.